Hey, what is up, guys? This is Kenny, Senior Research Analyst with the MiniAnalyst.com, looking at our weekly video. And first thing we're going to look at here is a chart of the market. And wow, what a market it has been. We're going to look at, we've got literally one position open, if you can believe that. But wow, is it an impressive position? $4,570 per contract. Now, this is for the. So we don't have anything in Marty currently, nothing in the doubler. Even Boost, which we thought had a long position, didn't. Crypto, Main, Select, Mace has a long position. The HW System 1.0 and kind of a new old AI setup that we can actually take a look at. But boom, there's the Mace up $4,550 per contract. Beautiful trade setup, taking advantage of this rather meteoric rise that we've seen, not only in just the mid caps here, but let's go ahead and take a look at the daily. If we can look at the so we're going to delve into the MADSC right here and look. We actually went to we switched. We had a little MADSC trade here that we took advantage of our official market timing switch to bullish, so we went long. Booked $4,000 in profits for MADSC, but our official market timing does remain bullish. Was switched at 25.85 on 4/3 of this year at 10:37 a.m. And whoa, what an impressive move it's made. Actually, we can look at the time here. Kind of look at a backstory. So we had this huge bounce into our massive level of resistance. We were bear among bulls, came down. We were bull among bears as the sell-off continued to retest the be-all, end-all of trend following significance in the 200 SMAs. And we were just painted into a corner, so we knew that there was going to be a huge uncoiling and a release of all this energy. What was interesting was that this level of horizontal support resistance, previous massive in nature, was actually continuing to hold. So that was kind of while the Russell had just blasted higher out of its pennant formation, its triangle formation. It blasted higher, a quick retest, and then just exploded. The S&Ps actually were struggling at this level of horizontal support resistance. But intermediate term measure of trend following significance and the 50-day SMA and EMAs really held on the closing and on the intraday basis for an explosive move higher. Now, what's interesting about this on the daily chart of the S&Ps is we are pretty much at the move we saw yesterday was just a straight up ascent, and what that is that's the market being magnetized to a key pivotal level. In this instance, obviously, it's going to be 2,800 in the S&Ps. Boom, 2,800. Boom, 2,800. That's the next key level, and market participants know that. In the old days of backing and filling, they're just going right for it. So if we can actually look over at this, you can see that our projection of trend, so we had these two levels of projection of trend, the market is essentially being magnetized. If we can move this, this is our market timing, little update here. We can move this back up. You can see it's really being magnetized to this trend. So in terms of trend and time, we should get to 2,800 within the next couple of days, probably, but it's not really going to be enough to make us wane from our official market timing. May look for some short setups because we are going to have some really strong resistance from 2,800 to 2,825. Kind of the same way we had from 2,700 to 2,725, which was a key fulcrum. We'll wait and see how the intraday dynamics play out once the market gets there. But if we can minimize that, MADSC and MADSC-DT have been quiet. And look at the trade manager, $4,600 for that one position open that we have in the MASE. What was interesting is we thought we might have a little bit more, but $5,000 almost per single contract in the MSC is definitely enough. So looking at the intraday dynamics, kind of faltering here a little bit. The market's at new highs. We're definitely seeing a negative divergence. No new highs here. No new highs here. Definitely trailing off here and really struggling here. So we've got some bearish divergence indications in terms of price. But again, that's kind of what we'd mentioned. We can just take a look quickly at the doubler. Look at this. I mean, it's just going straight up. So that's a magnet. That's not a normal market that's just going to go straight up. So we're definitely getting frothy. Definitely going to look for some short side setups. in the MADSC and MADSCDT, and so there you have it. Now, if you guys are interested in getting started with the MASE, we can actually take a look at it right here. So this is the MASE historical over the last 10 years, $13,000 maximum drawdown. We can actually probably look at it right here. Let's go to the home page, which we're at the home page. So we'll look at our portfolios, and we'll scroll down here to MASE. And yeah, so $13,000 max drawdown. This was the last $6,700 per gain contract that we put up, and another $5,000 on this next open trade. And of course, that hasn't been exited yet. Those are open position profits, hence the dashed line. But we're looking at net profit of $150,000, so about $15,000 per year is what you can expect. And the fee for that is $497 a quarter, so $2,000 a year, $15,000 a year in average profit over the last decade. Sounds like a pretty good deal. So just go to add to cart, purchase that. You can have it auto traded, sent to your cell phone, sent to your email. You can trade around it, trade with it, whatever you want to do. If you guys have any questions, feel free to go to the website, chat with support team live, or shoot us an email to admin@MiniAnalyst.com. Hope you guys are having a great summer trading week, and we will see you next time.